Happy Saturday, YouTube stackers. It's Florida Stacker back here with you. And I'm happy today because every day is a good day when we get to show you new gold for the stack. We've got a 1/4 ounce gold eagle. Stay tuned. Let's talk about it when we return. All right, and welcome back. So happy days, happy Saturday, March 13th, 2021. And as you can see here, we did get a 2021 1/4 ounce gold eagle. I purchased this coin through APMEX via their One Gold service last Sunday. Paid more than I'd like to pay for any coin really in premium. It's not a good coin to purchase right now. I hadn't gotten one of these yet, and been really good with it. I bought, obviously, I got 4 1/4 ounce maples, a Philharmonic, and a Britannia, right? I've been trying to pick up 1/4 ounce gold coins at a lower premium. So I've been avoiding my US Mint sovereign nation coins because of the premiums being so high on these coins right now. So yeah, the focus earlier this year was on the lower premium maple leafs like this one here. So 2021, up to 1 ounce of these now. Got 4 of these 1/4 ounce maples. So got a capsule open here. We'll go ahead and grab the capsule. And I've been buying these capsules off of eBay from a shop. I'll go ahead and post the link in the video description section. And they have so many different capsules. Now the pros are you get a direct fit capsule for any of your fractional gold coins, right? This one being a 22 millimeter capsule. Let's go ahead and line up the bottom here. And it's not going to be perfect, but I'm doing it on camera so we can fix it later. But here we go. Nice and snug. It's a capsule that fits without all that excess material or that extra ring on the outside. Now, that's the positive. I think it looks a lot better. And I've got all my gold coins now in these types of capsules that you see here in front of you today. The downside, of course, is there's 2 things that are down. One, they don't all fit in the same tubes. Like this is a tube here that's designed for quarters, right? Most of us know this for 1964 and older quarters that contain 90% silver. All right, so here's a neat little trick, right? The 1/4 ounce eagles, Philharmonics, and Britannias, they don't fit. It doesn't happen, but it's a perfect fit for the maple leafs. Almost said Britannias there. We'll go ahead and put 4 of them in and show you what I mean. There you go. Just a little tiny jiggle. So not all of these coins are identical when it comes to their, overall diameters. Obviously, they all weigh 1/4 troy ounce of gold, but some are a little thicker than others. And the maple leaf and the kangaroo, as an example, are thicker gold coins than their North American counterparts, the American Gold Eagle and the American Gold Buffalo. So that's why you're with the 1 ounce maple leaf, for instance, it's only 30 millimeters in diameter. And the buffalo, like this gold buffalo here, and the American Gold Eagle, they are 32 millimeters in diameter. So yeah, there you go. Some information about some capsules, once more, if you're interested in these capsules. So it's really difficult to store them all in the same way. I have a way of storing them that, doesn't involve tubes. So no big deal in this household. However, for some of you that like to use the airtight tubes, like this one here that's got silver coins in it, all the capsules are the same measurement, even if the internal size is different. That's why they have those ring capsules and all that excess plastic space on some of those capsules. That way you can put all kinds of different coins in here because the capsules are the same size, right? But that's not going to be the case if you go this route. So moving on, guys and girls, I really want to talk about an article that I read this morning. And now before we get started on this article, I want you to know I didn't write the article. A lot of times when I'm reading these articles, there are statements that may seem political. They may appear to lean to the left or to the right. I'm not writing this article. I'm reading this article. I think it's important for us to look at it, but save the hateful comments about President Biden or former President Trump. Okay, this is a stacking channel. Please just don't. All right, so now having said that, let's get on to the article because it's got some important things to talk about gold's behavior. What the hell is going on with gold? It's not doing its job. So gold to eye 1785 if stimulus brings inflation edge back to the metal. It's here. The stimulus America has waited 3 months for. In the coming days and weeks, we will see how the different markets respond to the Biden administration's 1.9. Geez, left the 0.9 out. 1.9 trillion aid to vaccinate the country, fund states and businesses, put money into Americans' pockets, and get the jobless back to work. Okay, as mentioned, we're going to steer clear of what the stimulus is really about, and we'll just stick to the article. In the gold market particularly, attention will be on whether the metal reflects the inflation concerns expected herein. Touted for decades as a go-to asset whenever there are worries about price pressures, gold has of late been systematically prevented from playing that role by Wall Street banks, hedge funds, and other actors that have sold down the metal while pushing up U.S. bond yields and the dollar, right? I mean, we've seen a little bit of strength in the dollar, even with inflation, and you can't trust the CPI numbers. Don't trust the government, all right? Now, maybe there's some things you can trust them with, but you definitely do not want to trust them on the inflation numbers. I mean, look at energy alone. Oil, which makes up about 45 roundabout percent of gasoline's price, is now double what it was back in November, okay? And they want to tell us there's less than 2% inflation. Have you been to Home Depot lately? All right, so moving on. Here's another one, okay? Brace yourselves for this one, especially my non-believers out there. Bitcoin, an asset that can barely prove its intrinsic value, has also cropped up as a contrarian trade, often rallying at the expense of gold. Yes, look what's happened with Bitcoin since the stimulus bill has passed. Over $60,000, continues on its epic rally. If you go all the way back to 2011, roundabout, and do the math, Bitcoin has gained 1/4 percentage point in value per day. That's right. Now, obviously, a lot of those epic gains happened in very large leaps, but the asset continues to rise. Cash is trash. Look, cash is printed by central governments, right? It's centralized. It's printed by governments that have control over how much of it they print. It's infinite in supply. They can print to the moon. You want to talk about going to the moon? Cash printers. That's what's going to the moon, okay? It's not GameStop. Sorry, hate to break your heart. But cash, the piles of it, that is, are going to the moon, and Bitcoin has been sucking the air out of gold's life. It has. Gold is not doing its job. So moving on. With President Biden's American Rescue Plan finally out the door on Thursday, and checks of $1,400 expected to land in some people's deposit accounts as early as next weekend, an inflation pop is almost certain in the near term. It's already happening. In January, U.S. personal income grew 10%, beating forecasts, while consumer spending rose 2.4%, just below expectations. After $600 checks sent out to most Americans by the Trump administration under a previous $900 billion COVID-19 stimulus package, despite that, gold prices fell 2.7% in January and continued to slide 6% in February. Monumental printing. Finally, there's inflation, and gold, the hedge against inflation. What's it been doing? I don't need to tell you. But how have they been offsetting this right at the shops that we like to buy from? Aha! You're starting to figure it out. They aren't as hedged as they say they are. Don't buy the bullshit, okay? They're just going to continue to raise premiums. And that's about what we're going to see here real soon as these checks start hitting accounts, okay? So bond yields benchmarked to the 10-year Treasury note, meanwhile, rose in that time period, hitting pre-pandemic highs on the argument that economic recovery in the coming months could overheat, leading to spiraling inflation as the Federal Reserve insisted on keeping interest rates at near zero. The dollar index, that's right, which is usually moves in the opposite direction of gold, which should logically tumble in an environment of heightened inflation fears, hit peaks not seen since November, after applying the same logic of runaway economic recovery and the greenbacks standing as a safe haven from its reserve currency status. Right, so here in the United States, you hear a lot of people, I even said it today, cash is trash, right? It's going nowhere. It's going somewhere. And I can tell you the direction is not up. All right, we are debasing like crazy here. We're talking 7 to 10% per year over the next 10 years, right? Who's going to pay for this? Like a lot of people are like, hey, free money. I'm going to run out and buy some gold. Well, the government just took out a loan for $5,500 on you to pay you that $1,400. So it's going to have some impact, some pretty big ripples here. In Friday's Asian trading window, both 10-year yields and the greenback flexed their muscles again. Futures of stocks on Wall Street rose too after Thursday's record highs on the Dow and the S&P 500. Gold was down again with its spot price, which fund managers rely on for direction, more so than futures, hovering at just above $17.10 an ounce. Right now we're at 1735, I think. Yeah, 1733.86. So we've actually come up since this was published yesterday. The target shows on multiple technical charts as a median resistance for gold. That is 1785. This is the price that this analyst is predicting as these checks begin to flow. He thinks that we're going to see 1785. All right, so investing.com's Fibonacci test levels for gold's upside itself is in range from 1743 to 1761 at the middle and 1789 there at the ceiling. All right, so the U.S. deficit debt show why gold needed as a hedge, why gold is needed as a hedge. A little bad writing there. While it's natural to dismiss gold's upside potential at every market downturn, a study of the U.S. fiscal deficit and debt to GDP ratio ought to be a sobering reminder on why such a time-honored store of value is important to investors when it comes to value. The U.S. Treasury's latest monthly balance sheet released on Wednesday showed a budget deficit of $1.05 trillion in the first 5 months of fiscal year 2021, with $311 billion coming in February alone. And that's before this week's $1.9 trillion stimulus works its way into the economy. So over the next few months, we're going to see the deficit for 2021 reach $3 trillion. Gross federal debt in the United States increased from 107.6% of GDP in 2020 to now 106.9% in 2019. U.S. national debt itself is approaching $28 trillion. Okay, so our country, the United States of America, now owes itself $28 trillion. That is a number that is pretty hard to fathom. And while the United States appears to be in the relatively early stages of a monetary expansion cycle, the money supply could still increase substantially and set the country up for a return to the 2008-2009 financial crisis days. Guys and girls, that is why we hold gold. You have to have your base. You have to have the Alamo. You've got to be able to fall back on your defenses. And that's what gold, and to a lesser extent, because of silver's more volatile nature, silver is. Silver and gold are your insurance. They're your defense. They're how you maintain your wealth from all the craziness out there. Now, gold is misbehaving right now. It's not acting the way it should. Hopefully, when these checks start flowing, nothing we can do now to change that. That's happening. It's reality. So $1.9 trillion in stimulus about to hit the economy. You can bet premiums are going to get jacked up. You can bet there's going to be a lot of action in the Reddit stocks as the younger Generation Z type traders get a hold of this cash and start throwing it at their Robinhood stocks. And you can also bet that Bitcoin, which is already over 60K, is going to see a massive influx of money. So those smaller altcoins have the potential to really skyrocket as this money gets into the hands of traders. But, gold, we'll see what happens. So 1785, let's see if this guy's right. Let's give it about 2 weeks. And I guess we'll know. All right, everybody, that's going to conclude today's video. I hope you found this article interesting. You really got to think about it. Why isn't gold moving? What's going on? Why did they deliberately raise yields on treasury notes? I mean, who's in charge of that? I got to figure this out, but something fishy's going on. Gold's misbehaving. Let's hope that when these checks start flowing that gold finds its feet. But until then, keep looking for the deals. Stay away from the high premium stuff, and we'll see you soon on another stacking video.